Hello guys and welcome back to the channel. This video is going to be more of a talking video. I wanted to have a talk with you about losing money on Palantir, how this has changed me as an investor. I know that there's a lot of backholders of Palantir here that are temporary in the minus or in the red with Palantir, and I want to tell you a little bit about my thinking, how I deal with this, and a little bit my thoughts around this, and I really hope that this will help you out. This is also, I like to do an update on my portfolio every month, and this is that time of the month, so this is a bit of a looser format. But as always, if you like this content, please make sure you hit the subscribe button, and if you want to support me making more of these videos and you want to get access to all the valuations of the companies that I do, then you can hit the first link in the description box below, which is to our Patreon. You can check it out. It helps the channel out. So many of you, like me, are in the red with Palantir, and some of you are more than others. Like, I started investing into Palantir pretty late, so my cost basis is $9.95. I started buying here, and you can see that then it went lower, I bought, then it went lower, I bought, and then it went lower, I bought some more. If you are somehow in the green with Palantir, you have to tell me when you bought, what was your logic, how much you bought, because I mean, the people that have bought here for $6, my God, they did a very good deal. But that is to say, I'm really not sure if we're not going to see that price again. There is a possibility that we will see that price again, and I hope I can buy some more. However, this video is not about that. This video is about that I feel that there are two types of investors, and there's a lot of short-term investors and there is less of long-term investors. And I used to be a very short-term investor. I actually was into technical trading a lot based on trading with zero fundamentals. I would look at the stock chart. This is something that I would look at. Yeah, the MACD, it crossed here, so that's a buy signal. I actually realized something that I think applies to a lot of people that watch this channel, and I came to the opposite side of the horse because I realized something. This is the video that I never thought I would make. Again, I had this realization, and if it helps even one person out, it makes me feel better. Grant Cardone says, he's a guy that I really respect, that many people don't make it financially because they never do the math. And I realized that this is true on more levels than you think, and I hated when he said this because I was like, everybody knows math, and until I realized that even I haven't done the math, and I actually don't do the math for myself and for the family, And then you realize all great truths are simple. Sometimes they're too simple for you to understand. What I'm trying to say here is there's two ways that you can reach your financial goals, whatever that number may be. And that is by saving money and then investing that money to get a return, right? Let's say that we want $1 million, because this is just for calculation's sake. So you can save, you can have a very high income and save $1 million, never invest it, just have the cash, and then you will have $1 million. Or you can make, I don't know, $5 and have a crazy return on the money, and then you will reach the $1 million, right? For most people, it's a combination of both. Maybe you were one of those who bought Bitcoin for 2 cents and you're still holding it. In that case, your $5 would be $1 million today. I don't know what your chances of replicating that is. And again, there is some people who have certain jobs where they're taking home, I don't know, multiple tens of millions of dollars. Again, it's not replicable for most of the people. It has to be a combination of the two, right? And here is what I realized. Most people are chasing an unrealistic dream of how much return they can have on their money, and they are neglecting their best investment, which is themselves. This was even true for myself. And let me show you what I mean. This is what I realized. So if you are having a take-home pay of $50,000, and I don't think as a family you can make it on that money, so you have zero money to invest. Let's say you had $10,000 in savings, and you invest it in 2023, and you have a 10% return on the money. Then the next year it will be 11, 12, blah blah blah, and then you can see that you are basically never going to reach the $1 million. So what are your choices? You can increase the return on the money. So let's say that the 10% per year, this is investing in investment funds, okay? No thinking, you spend zero time, you just put your investment there, and then, you never look at it again. Let's say that you're going to invest with, let's say, Kathy Woods, and you know that she's going to outdo the market, this, hedge fund manager, and you're going to get a 20% return. Really good for you. I want to say that here you're significantly outperforming the market, and very few people can do it. And as you see, if you are starting with $10,000, you're still basically almost never going to reach your $1 million, or not in a time that you would like. Okay. So then you can become a longer term investor. I would like to go for 30% per year. And I basically invest into stocks that I believe have the potential to do this. I'm fully aware that, for example, in Palantir, my average cost of $9.95, I'm fairly certain that, you know, within 10 years, that stock is going to be $100, right? So that's a 10x on the money. And that is about a 30% return per year compounded over many years, right? But the thing is, I'm okay if it doesn't happen and Palantir ends up being a $50 stock. You will see why I'm mentioning this. So now let's say that, you know, you watch YouTube videos and you see Meet Kevin and you go, I'm going to trade the stock market and I'm going to be better than Warren Buffett. I'm going to be better than Jim Cramer. Even though, you know, you don't have those connections, you never get that training, and you're going to get 30% on the market. You know, you can see that now you're getting close to, the numbers are higher, but still you're nowhere close to the million. Sooner or later you would reach it with this calculation. But you know, I feel that many investors who start out on the stock market, they are thinking like, okay, I'm going to short-term trade and I'm going to game the market and I'm going to have 50% return per year. This is a return that if you could keep, you know, you could reach, you know, 1 million in, 13 years. But it's highly unrealistic. Peter Lynch, one of the most legendary investors of all time, had a 20-something% return of like 15 years. You know, Warren Buffett, I think between 1970 to 2000 had a compounded 22% return on his money. And he's one of the best investors, or he's like the best investor that is known out there. So for you to think that you're going to have these returns is highly, highly unrealistic. So here is where everybody goes wrong, because I don't think that you should focus for this. So if we just say that, let's be pessimistic, you are going to be between 10 to 20%. Let's go to 20%. Your only other way of reaching your goal is to increase your income. So let's say, and this was a big surprise for me, my income is multiple six figures. I don't like to talk about it, but I actually realized that it's easier for me to increase that income and thereby change the capital that we can add to, you know, invest into stock market, real estate, or whatever, than it is for me to spend hours and, you know, study options and, you know, trade and trade and trade. I get a way better, you know, return on my time if I just focus on what is already making money. And I believe that so many people who watch these videos are in the exact same shoes. Let me show you what I mean. Let's say that, you know, you invest into a course and you learn something new, a new skill, and you can, you know, you can increase the family take-home pay to $70,000, but you keep the same living standard. Suddenly, then it allows you to save $20,000 every year, and you will reach the $1 million even with the lower returns. Let's say that we're super pessimistic and you say, I'm just going to focus all in on, you know, you're going to learn programming, or you're going to learn sales by Grant Cardone, or, you know, whatever, and you're going to double your, you know, family income. So now we're really going pessimistic here on the calculation, but let's say you double your family income. And look, you went way further than trying to tweak your investment. I basically started realizing this, that, you know, I spend a lot of time trying to trade the market. And why? Like, I could actually choose stocks like Palantir, like Tesla, and some other stocks that I don't want to name here. I'm 100% invested into Palantir, and I can, you know, buy them, put them in the box and not even look at them, and actually focus on increasing the family income. Because if you can increase it to 150,000, look at the magic that happens here. Then you're suddenly at $2.3 million, even with, I mean, basically the 10% return is what investing into an index fund can do for you. Very, very, very doable, very realistic. Your grandma, anybody, your daughter can do it, you know? And let me give you an example. I read a book by Trump's lawyer. The title was How to Negotiate Like Trump in Real Estate Deals. I happen to have a real estate company and we are building hundreds of apartments in South Sweden. When I read this book, we happened to be in a negotiation, and I just applied a few simple points from this book. For example, one point in the book was that the person who sends the term sheet to the other person has, you know, negotiating advantage. So I just decided, because we were negotiating with a home association on buying a piece of real estate from them, and they told me, yeah, we're going to send you over the term sheet. And I told the guy, look, it's very nice of you, but I can ask my lawyer to do it, and then you save some costs, you know? Then you don't have to pay for the lawyer. He was happy for this. And then in the term sheet, I listed out, okay, the transaction cost is going to be, financed. We agreed on a price already, right? So it was just small details. And in the small details, we sent them the term sheet, and I got them to cover, I think it was $5,000 worth of costs that would have come on us had we not written the term sheet. And I invested 2 hours reading the book. The book was $10 and I got $5,000 back. And I'm sure a lot of you who are watching this video would have a way better return in investing into yourself than chasing, weird stocks and weird trading strategies and trying to time the market. Nobody really talks about this, and it's really crazy. And when I realized it, I felt like a freaking donkey, and suddenly I felt how smart Warren Buffett is, that basically what you need to do to take care of yourself is you really need to increase your income with whatever way.
Alert from low battery.
You need to make sure that you don't lose your money when you invest. And even if you're getting a low return on your money, but that's a for sure return money, you will be way better off than chasing unrealistic returns and risking your capital and spending all of your time in that. So the reason why I said all this is because even though I'm down on Palantir, I have $100,000 portfolio, one with my real estate company and the other one with my dad. It's like 50,000 with one and 50,000 with the other. And even if Palantir would go to zero, I wouldn't care, because I have this investment. I know that, next year I'm going to have this money again. I'm even going to have more. As I said, I'm focusing on increasing the family income. And if I keep on investing into stocks that can 10x in the future, I don't need all of them to work. So if Palantir goes to zero, but the Tesla investment that I'm going to make in the near future, if the price keeps dropping, that goes to 10x. The portfolio will still be, way over this 10% return. I think it would still be around 20% per year return. But I know this. So it's very important to know your trading strategy, do your math, look at what's best for you individually and what it is that you have the possibility to do. And I think it's super underappreciated how much you can change your personal finances by investing the money in you and, not into stocks. It will do miracles for you. So this was a longer talking video, and I'm kind of interested in what you guys thought about it. Do you want me to do more videos like this? And let me know what you are focusing on as an investor. Are you chasing returns? Are you looking long term? Are you working on your income? I'm very interested, and thank you for watching. I really appreciate you, and I will see you in the next video. Bye bye.